I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market lost ground again last week as investors and traders drove very volatile swings in the market. The market started on the downside as an early decline came on fears that China was about to use their military to stop pro-democracy demonstrations going on in Hong Kong. So that brought selling in on Monday that was pretty steep. And Tuesday saw pre-market selling as Argentina went into collapse, their stock market breaking some 48% and their currency just getting killed on the downside. That looked like it was going to bring a lot of selling into the market in on Tuesday. And I admit, I thought the market at that point still had a little more to go on the downside, which came later in the week. But I was there making my breakfast in the morning after I had just bought a whole bunch of put spreads, thinking that the market was going to go down. That was a setup for that bearish trade. But the real shocker, as I added fruit to my breakfast plate and then turned around and looked at the market, in some 5 minutes, the S&Ps moved up 55 points. That was a shocker to me and to my account. And that came as news came that the U.S. was going to either remove or delay the 10% tariffs on about a quarter of the products that they had originally said they were going to do it. The president obviously did not want to be the Grinch that stole Christmas, so he wanted to protect the consumer from the issues on tariffs that he said weren't there in the first place. But that's what the plan is, and they're not going to put tariffs on a lot of items like phones and laptops, and that gave a huge boost to Apple. That jumped like $11 very quickly, and the indexes just soared to the upside. That was a big reprieve day for the stock market, when that really was not able to hold in this market. That was really some big swings. That proved to be a one-day wonder, but there was more commentary later in the week out of China regarding tariffs that said they were willing to move halfway, and that didn't really bring a big reaction in the market. The news that day, however, started to bring the inversion of the yield curve as the 2-year to 10-year got inverted, and that actually brought some big selling later in the week. Also, as that killing and completely reversing that big day that we had on Tuesday, with the market falling on Wednesday 800 points on the downside for the Dow. That was the fifth worst point day ever for the Dow on the downside, and the selling was just relentless. As the yield curve inverted, then there's some mandates that some investors and fund managers have to lighten up the risk on their position. That does mean that there's a potential recession, and that got the market moving very sharply on the downside. Then there was a report that got the markets even more nervous and got that more pressure on interest rates. The Spectator came out, and their report said that Powell had ordered a blackout. That meant that no Fed officials could go in front of the media. That brought a ton of fears into the market, that would mean potentially there was a surprise meeting coming and a surprise rate cut or something else. And that really scared the market, and that helped that big day to the downside. Friday brought a bounce in the markets that was helped by NVIDIA, who reported earnings and got a bounce. We'll talk more about NVIDIA later. And also news that Germany, with contraction going on there, is actually talking about deficit spending. That's something that they have not allowed, but they want to fight this recession, and that helped the market also. So we're getting a big bounce here on Friday, but it's still quite a rough week for the stock market. It's about the Fed. The Fed is in no man's land, and this is the first time ever they've had to deal with an inversion at such low interest rates. Usually these inversions come, that's when the short end of the yield curve is higher than the long end of the yield curve, because they pushed it. They pushed up the short end. You've got to watch the video that I did on Thursday about the big picture on the Treasury market and long-term yields. I think it'll be amazingly informative to you. And of course, that's for our level 2, 3, and 4 members. So do become a member to watch that. And in that information, in that video, I discussed this yield curve and the fact that the Fed has simply lost control. The markets, I always believed, would punish their bad actions. And what that would mean was that eventually they would lose control. I always thought that it would be they'd lose control because of inflation. In other words, all of the stimulus would bring a big round of inflation, and then it would force their hand, with interest rates spiking to the upside based on that happening. Of course, what the Fed does is create big rounds of inflation and deflation, and where we are right now is a deflationary spiral force that's been around for over a decade that they've lost control of. And now the interest rates are driving their hand again. Add to that the massive public and private debt that we have out there in so many countries. The UK, massive number of debt, amount of debt to GDP, private and public. Japan is the leader as far as that goes. China right with them, and of course the United States and Europe, all of them, massive amount of spending going on, and the consumer out there is under huge stress. So you can't really get growth in this economy because companies don't know what to do when they have this dark cloud of the Fed manipulating things and no organic growth. So CapEx is really slow. We're at amazingly huge amount of debt in this world, and huge, absolutely huge spending going on by the consumer relative to what they make, which means that the savings rate is completely low. That might be why we're getting some bad consumer sentiment numbers coming out right now. The Fed has lost it. They've lost control, and now what they're going to be forced to do is something, well, quite extreme. We're probably going to see interest rates below 1% before you know it. I talk about that also in this video, and the Fed having to do something like QE4 and who knows what else in order to get some stimulus in the economy, which they cannot get based on what they've done over 10 years of this great experiment. And still in world economies and central banks doing it this way that give you no growth, negative growth. UK also in a negative growth situation, along with Germany, and I believe that area of the world is going to be pulling the US down. China slowing down tremendously, Japan not being able to get any significant growth. All of this, the central banks giving us nothing throughout this whole period of extreme ease and the great experiment. And this is what they are giving to our grandchildren, essentially. Economies that can't get stimulated because they have done this. Yes, I'm angry about it, and you can hear that in my voice. Until we take that away from the Fed, we're going to continue to be in this problem. Here we are, record debt, economies either in contraction or extremely slow, yields at record lows at this time, and recession ahead. That's where we are right now, And that's why the stock market is in a toppy period right over here. Yeah, they're going to try to get bounces back, and over and between now and some months from now, we're probably going to be putting in a top with some decent attempts to move to the upside based on the lower rates, and also some big declines based on the fears that we have. And we think that as this top forms, we're going to continue to have these big swings, and then bear market ahead. That's where I think we are with bear markets coming into the early parts of the 2020s, 2021 into 2022. Who knows how deep that will be, but I believe we're in the topping period right now. So for now, we called this almost exactly to the number for the rally. We called that this period of high volatility was coming. We think it's going to stay here for a while. Stocks for the week, the NASDAQ down fractionally. It did a little bit better on that news about the tariffs. Other indexes down between 1% and 2%. The Russell getting the worst of it. Bond market up again, 30 years up 4 points. 10-year yields were down as low as 1.47. 1.33 was the record low during the Great Recession, and here we now are again. With the stock market up at these levels, watch that video that I did. 10-year yields 1.56, and the 2 to 10s that we thought would invert and did got now slightly positive, but still I think there's going to be more deeper inversions out there for the yield curve. Gold market up $12, benefiting from what will be a currency war, or a war to the bottom from all of these countries, trying to do what they can, each one deporting deflation from their own country to the other country through lowering the value of their currencies. We expect to see a ton more of that going on. So gold market up $12. It's probably going to be up hundreds of dollars more over the next year. Dollar gains 1% on the week, and that's despite yields plunging. That's because Europe is so bad, the rest of the world is so bad also, so it's a dollar is a current a safety bid right now. And oil gains about 50 cents from depressed levels, and we believe there is more downside coming in there, and we're going to talk a lot about that in the coming up segments where we look at the short term for oil and all of these markets towards the end of the show. Follow me on Twitter at askSlim. I'll become a YouTube subscriber. You like this video, give me a thumbs up. Make sure you go onto YouTube and put some comments on there. Tell me why you agree, why you don't agree, and just don't give me a thumbs down without saying something, because, well, that's cowardly. So let's get a conversation going, and you can do that on the YouTube comment area. That's it for the opening segment. I'll be right back with the best and the worst for the week. All right, every single week I bring you the best and worst stocks for the week. I go through a huge number of symbols. I follow about 400 symbols, do cycle analysis on about 75% of them, which have some regularity in their movement in the markets. In other words, the rhythmic motion that we look at. That's the most important aspect of our analysis, looking at psychoanalysis and the rhythms in the market. That's the heartbeat of the market, and you can learn about psychoanalysis by going to our information page on the askSlim website, which takes you to the psychoanalysis workshop. Look at workshops on the top and go look at that information page, watch the little video I did there, and you'll get an idea for this 20-module workshop that's available to learn this type of analysis. So let's take a look here as we look at the stocks that were the 5 best stocks for the week, pattern-wise and gains. Some of them maybe not so good pattern-wise, but they had some gains that I think are interesting to look at. And I'm gonna the last one I'm gonna look at here in the gains is NVIDIA, and I'm gonna take a little bigger look at that and demonstrate to you our Slimulator, give you a good look at that, and we'll take a look at what the rankings are and the daily chart is in NVIDIA when we look at this, the fifth one of the best of the week. Here is CSIQ. This stock gets an 8% gain on the week on good earnings. We had liked First Solar, and in the past had liked this one also, but what we see in here, this big gain, First Solar is not able to do this. First Solar came out with earnings that weren't as good. They were somewhat disappointing, but CSIQ came out with good earnings. As you can see right over here, it had this big gain for the week. You see this resistance zone. It's been holding in there, but now it moves through it, and that's really a good occurrence. You can see that our projection is for it to maybe chop around, give some ground, try to get up to 26, and then sometime in October get some little correction in there. This is the period that we like it out over there, towards the end of the year, beginning of next year, when I think it will be better. But this is a much improved pattern in there, gaining 8%. Now, if I go to my best gainer of the week is 8%, you know there was not much in here to show you. So CSIQ, nice gainer in there. The next one is Alibaba, BABA. Now, you can see the stock rallying in here. 8% gain on the week, earnings strong, and they say their cloud business is very strong. I'm going to call this a little bit premature in what is a developing good pattern going on in here. So you could see the big negative pattern that you have right in here, and you could see the dominant cycle and how it goes from low to low, and then the minor cycles that are in there. And you could see this minor cycle bottomed here and rallied, and this rally is a little bit premature, though it does really say that this area near 150, 152 is very good support. So what we're looking for is one more pullback in here over the next month. Maybe this comes with the stock market pushing it down, but overall I like this pattern that I see, and I would be a buyer as an investor for the next dip in here, and it suggests the stock could have a very big rally in the fourth quarter of this year. So during periods of market reprieve in here, I think that Alibaba could be a strong gainer. That big gains in their cloud business is significant. Walmart is another stock, Walmart, that is doing extraordinarily well. Now, this is a great example of understanding cycle analysis and telling you why the expectation is that the stock is going to go higher. So you can see in here, we call this a positively configured cycle, but it's not all that positive because it almost got back down to this low. And then the next cycle goes out and takes out that high. That's really good. When it does that, it says there's likely higher prices coming. And then you get what we call this right-hand translation, a very positively configured situation, which says the stock is likely going higher. It gets through that intermediate resistance zone this week on its earnings report. Earnings report was great. Analysts upgrading the stock, raising targets. Its sister stock, Target, actually gains about 3%. We think that one has a little bit more work to do. But this stock looks super good to us, and we think it's going to make much higher prices. And during this period of market fluctuations, we would expect that the down days or the down periods for the market will not break Walmart. The buyers will continue to go in there. You'll get some smaller declines, and on the good days or the better markets, Walmart will over participate on the upside. We like this. This is a very solid pattern. The only way to break that would be if it got under this 105 level. That's a long way down. Getting through this resistance zone is really good. We'll be taking that out of there, and this is a very, very positive pattern when we look at Walmart. Next one we're going to look at is Dollar Tree, DLTR. And this stock, which gets a gain this week, which it could not hold, some of the retailers got a pop. Now I'm going to show you in the worst of the week, it's almost all retail. But they got pops in here. You can see that on the news of the backing off on a bunch of the tariffs. Of course, the president chickening out. He doesn't want to get blamed for no Christmas. So what we're getting in here is an attempted rally. But you can see in here the pattern is incomplete. In other words, we're getting a rally in here very early. And when you get rallies very early, you actually had one right over here, and you could see how it failed right in there and came down into the target zone. Well, this one over here is likely to fail also. We're looking for another, well, we'll call it 3 to 5 weeks of decline in Dollar Tree. We think this is a complete fake. Now, NVIDIA, we're going to take a little different kind of a look in NVIDIA here. This stock up 4% on the week, NVDA. It had a very good day on Friday, up about 6.5%. And this stock, you can see it really looks like it's trying to base in here. After that big decline, it failed in resistance right there. And then we believed there was a high odds of failure right in here. Why was that? Because this decline gave up more than the 78.6% fib through that lower support zone. That means that it would fail in the resistance zone up here, and that's what it did. So you will note that it's gotten a good rally in here. I mean, we've got this uptick right there. Well, it's not really that good from the support zone. And with that good earnings report, earnings up, but analysts really mixed on this. We're going to call this not great. Micron up 6% on the week. Well, that's a better pattern, and we still think it's got a few weeks of work to do. But this one, you can see moving up in here, and the real low is not projected out till around October 1st. So this is really not a stock that I would be chasing on the upside. But I want to take a different look at NVIDIA. I think this is an important look because we like to look at the conditions of stock, whether or not we believe, based on the condition, a stock is in an uptrend, a downtrend, is it a bullish or bearish bias? How do you even know that? Well, we have a way to look at it. We have our what I call is our amazing Slimulator, and we're going to go to the front of the website right in here. And right up here on the top right where you see dashboard, I'm going to click on that. And I'm going to go to our dashboard right here. And I'm going to go down to where I can find the Slimulator. You can see right there, Slimulator, rankings right there, and I'm going to click on that and go to our Slimulator page and take you down to this amazing product that we have here, this tool, which gives you the 84 best traded symbols in several different time frames, and essentially gives you the condition of the stock. It tells you the directional bias and the outlook for the next 3 to 6 weeks, which is the sweet spot for swing traders or for option traders. So all of these rankings in here, you'll notice that American Airlines right there says that, well, there's a short-term rally likely because it is extreme oversold. You can see that N1 orange. But what I want to do is go back to NVIDIA, NVDA, that you see right here, and I typed it in and it brings it up. Now look at what's going on here. The long-term condition of the stock is negative. The intermediate turn is negative in N1. That tells me that it's got some weeks of decline left in it. The short term is negative, and the option bias indicator is N3, very negative. That's so significant, and here you could see the weekly and daily charts. Now, we are now updating our daily charts daily. So that is for our level 3 and 4 members, the people that have the Slimulator. And I want to show you, if I click on daily chart right here, it's going to open that daily chart up for you to see on NVIDIA right there. This has all of our work on it, all of our cycle analysis. And you can see in here this update that occurred today that got into the sell zone and has started to pull back in here. And our projection that it gets up into the sell zone and then starts to sell off again. That's that period of several weeks that we're looking at that we think is likely to give you some further decline. So that Slimulator that I just showed you, it's just an amazing way to look at stocks with all of that information. 84 of the top traded stocks with all of that algorithmic logic that's built into it. It really will help you a lot. If you want to have that Slimulator and any of our other specials, which we have for level 2 and level 3, write to Matt, M-A-T-T, at askSlim.com, and he's going to send you a special trial link with good discounts in there, and you'll be able to use that Slimulator and try it out. So you could see the value of it, and that says to me that NVIDIA, which is one of the best stocks of the week with a 4% gain right now, has not a lot of likelihood to continue these gains very far, and we think that based on that information and our cycle analysis, that rallies are sells, and there for swing traders or for option traders should be maintaining a short side bias based on the highest probabilities of what we see there in all of this important logic, our proprietary information, all built into there for you to use for your trading. That's it for the best of the week, and I'll be right back and bring you the worst. All right, for the worst stocks for the week, I'm going to show you basically consumer stocks. So, of course, I was ragging all over the Fed earlier in the show, and the fact that consumers are scared, tapped out, overly indebted, pushed into buying things that because interest rates are so low, and here we are in a condition where the retail is just getting absolutely hammered. And when you look at luxury retail, that is a category that has been totally annihilated. Let's take a look here at the worst stock for the week in my 300 plus stocks, and that is Tapestry. This is the old Coach, and Tapestry down 26%, earnings a very big miss, guidance very weak, and analysts falling all over themselves to downgrade the stock. Of course, we had the stock negative for a long period of time. Since this breakdown right over here and the negatively configured pattern, which said it would decline through this period, then the failure and another negative period going on right over here, which actually looks like it has another week, some weeks to go. The stock falls from $55 all the way down to $20, and we wouldn't be surprised to see it like sub 16 in here over these next few weeks. Then it will probably get some reprieve in there. But earnings just really bad, prospects just not good at all based on their guidance. And we're getting a lot of that from retail. So while the president tried to stimulate things by cutting back on the tariffs and hoping to help retails and retail sales and consumers are scared, and the retail stocks are getting bludgeoned. Here is Macy's, down 16% on the week, earnings weak, analysts downgrading this stock, and their turnaround and that they're working on is a non-turnaround. It's not happening, and you can see in here this stair-step downward movement going on. Resistance zone, resistance zone, resistance zone. Some of them hit, some of them not, and all of them really weak. This is what we call minor cycles stepping downwards, and look, there's another one over here to come. Yeah, you could get a bounce here in Macy's, but we don't think it's going to last, and it would be moving down again. These soft good retails are just getting decimated, and there's a couple of more in the category, like Dillard's. Look at this nightmare in here. As the stock tried to rally up, it got up to the resistance zone, gave that massive shooting star, and then moved down and just collapsed through that support zone. This is one of the worst patterns you'll ever see, where you broke underneath this low right over here with the cycle pattern having all the way to November to go. That says, you see all this white space here? It might fill some of that with some attempted rallies, but they're going to keep getting wailed on. And we're looking for lower prices. This stock could be sub 40 by the time we get to that low due in November there. So Dillard's a very sick stock when you look at that. Nordstrom, JWN, another one in this sick category of retailers. You can look at this downward clear cycle patterns. Actually, there's two out of phase patterns in here. There's a minor and a dominant that you can see, and both of them clearly affecting price action. And when you learn to read the cycles, and please do look at our introduction to cycle analysis, then you will be able to understand how these out of phase cycles actually are affecting it. You see this minor one right in here coming to this low. That means there's likely to be a little bounce attempted in here, but we don't think it's going to last. You could see the same thing happened right in here. A little bounce came right there, and then it got smacked again. That's probably what we're going to see in here, and a lot of choppy action, more to the downside. The stock could go much lower yet, even though it's given up so much value from 67 all the way down to 25. Another really bad stock, down 13% on the week. Analysts downgrading this horrible pattern on here as the stock reports bigger losses than they expected to see. That is Dillard's was bigger losses. Analysts downgrading that one. By the way, in this category of retail, Best Buy down 11% on a terrible, make that Bed Bath & Beyond, down 11% in the terrible category. Gap Stores down 10%, as just also looks just sick, but it's right now nearing an area that maybe it would be bottoming for an attempted rally. Gap Stores will look for a little reprieve in that one. The last stock we're going to look at as we look at consumer-related stocks is Cheesecake Factory. Man, when you go to their stores, their restaurants, you get some really good food. They have one of the broadest menus, and of course their cheesecake is one of the most fattening things you could possibly eat, and so I try to avoid it when I go there, but they got some great stuff. I actually love their Thai chicken salad. Anyway, the stock is incredibly negative. It tried to create a base right in here, and you can see that. So it looks like this, and then you get higher highs, but you look like this and then fail, and then you start to move down. The stock looks like it's going to collapse all the way out here into November. We have a lot of stocks that have cycle patterns that go down to October, November, and that's in alignment with what we think is going to be further declines coming in the stock market. Cheesecake Factory, a really bad pattern in here, and their earnings came out on 7/31 with really much weaker revenues than expected. It's been collapsing ever since, and we don't think it's over. You get some attempted rallies in there. I don't think they're going to continue. And what we're just looking at is just representative of companies that are the consumer type companies that are doing poorly, and the consumer is not going to drive this recovery. If anything, they're going to drive the recession that isn't far out there. And maybe it's starting already. Maybe it'll start in a few months. But the bond market knows something. To watch my video that I did Thursday on the bond markets and treasury yields. That's it for the worst stocks for the week. And now comes our short-term view for the coming week. All right, our short-term view for the coming week. What we always do is look at daily charts and get some kind of a picture of what we think is going to happen in the next week. These charts that I show you, of course, are our cycle analysis. If you're a trader or investor and you do want to get our short-term snapshot for the indexes, it's an amazing tool also that will really help you. What we try to do is get it so where you can maximize your trades, and we show you acceleration zones, support, resistance every day that comes to you before the market opens if you're a short-term trader. So write Matt, M-A-T-T, at askSlim.com, or you can go to our site and sign up. 14-day trial for $14. You'll be able to get a look at that, and I think it would be really to your advantage. And plus you get 400 videos that you'll be able to look at during that 2-week period and crash watch all that you want, binge watch, and tremendous information that you have in there. So write Matt at askSlim.com and ask him for that $14 14-day trial, and you'll get all of that and you'll be able to try it out. So we did pretty well last week. We like to be 2-to-1 right versus wrong. We were about 63% correct in what we said as we look at cycle patterns, support, resistance, net change on the week on the 5 major markets that we're going to show you right now. So we did, I would say, really well. We're going to start with the energy market in here, /CL, and look at the daily chart. And we'll blow that up, and you're going to see our short-term cycle analysis in here. So here's your daily chart. I'm going to take a closer look right over here. And we thought that we would get light crude trying to move up and then fail. We got that. We thought it would be a down week, and it's actually just barely an up week. It didn't really make any significant upside ground in there. So we were really close to this. You can see in here that our projection is such that it could try the upside by a little bit. We think it's going to be a choppy week and mostly downside. Note momentum. The slim ribbon in here is showing you momentum is to the downside, negative momentum. And when the projection oscillator gets overbought in negative momentum, it tells you that you're likely to see further declines. And you can see that it rejected there. So we're going to call this a down week coming up for the oil market. It could hold up a little bit in here and try a rally, but the next 2 weeks really do look like there is downside risk again, and that this bounce that we're having in there is only going to be temporary. Next thing we'll look at is the gold market, /GC. So what we thought last week was gold was starting to roll over. It wouldn't make a lot more upside ground, and that it was going to be a small down week. It's actually a small up week in there, and you can see it's starting to really reject in this area. It got up to 1546. And it's now trading about 1525. So here we are at midday, and a couple more hours to go for the day, but gold, of course, is going to close shortly. And the look in here is that we're going to get into this correction that we're looking at in here really looks to us like it's in good alignment with the weekly pattern, the intermediate period. So what we're going to look for is a range that is somewhere between that high of 1545 down to about 1482, potentially down here to about 1465. So we're going to look for these next couple of weeks to be a pullback and to set up what we think is going to be a very favorable period again after that. So looking here at gold, we would expect that we're going to get a small pullback in here against this very strong upward momentum that has continued in here and been driving the market to the upside. So it's hard to be making a bearish call other than the fact that we're looking at the rhythm in the market that suggests a correction. Everything else in here is really very strong, and we're only looking for a quick minor pullback here for a couple of weeks before it then moves sharply to the upside again. $DXY we're looking at here. This is the dollar index. Take a look right here, and you can see these cycle rhythms. When you see the blue dotted there, you know that there has been a shift, and we're looking at the shifted cycle now, and the projections in here are related to the shifted cycle. The faded out one right over here is the older pattern. We leave it in there to see if it comes back and has meaning or not. Right now it does not look like it really does. Notice right over here, this is a gravestone doji, and that usually means that you're done going on the upside when you get that. We're going to look in here for a choppy market in the dollar. Just, maybe hanging out between the slim ribbon right over here about 97.70 and the upper resistance over here about 98.50. So this looks to us like a sloppy action in here, maybe a small downward bias that we see in there, but not really that much that we see. It's kind of going to be more of a tighter range in that period. And though it might be able to test this 88.45 area, it's less likely based on this pattern that we're seeing in here, and more likely that we get a little bit of a pullback over these next couple of weeks. But again, we're not looking for anything very serious in there. And note that momentum, you see that green arrow right there? Momentum is just turning positive, so that's going to prevent any kind of significant decline, and we think it would be more range bound, meeting resistance on the upside with momentum coming on up from underneath. Is likely to keep it from having any real significant moves that we see in here, outside of something dramatic coming from the Fed, which of course would move the market. If that surprise rate cut came, we would see the dollar likely moving sharply to the downside. So we'll see if they do come with anything, and if that rumor of the media blackout for Fed officials is any truth to it. Here's the bond market. It's been surging again to the upside. We thought it would stall at 164 in somewhere in the top of this, near or above the top of this target zone right up over there. There was some resistance that we pulled out of here, and now it gets up to this area right near 167, and you can see it's not given much ground in here yet. Momentum very strong. So for the next week, we're going to look for a down week. You see this cycle right in here, it's driving it up, momentum strong, momentum remaining strong, and support right over here. So this would be a minor pullback. We're going to look for it to get down. This level right over here is 161.25. That's the top of that support zone. It could get support at that 163.16 area on that 23%. That's the best that we see, is a pullback of 2 points, potentially 4 points in here over these next couple of weeks. So we're going to look for a down week in the bond market in just a corrective process before it then moves again to the upside. That's like what we see in gold, right? Where we see just some kind of a pullback in here, but nothing all that significant in the bond market. And we only expect yields to have some minor upside moves, which again, you'll see in that video that I did on Thursday on the yield market. So make sure you do watch that. All right, for the stock market, well, here we are with the stock market moving up sharply here on Friday. And the S&P 500 right now up some 40 points as we got a couple of more hours to go in the day. Pretty good rebound in here, again, helped by NVIDIA, helped by Germany, talking about that they were going to start to deficit spend, and helped maybe by cycle action. We had said last week that we thought the stock market would attempt a rally and then fail, and then would fall again down to the area between 28.40 and 28.20. We nailed it. It was absolutely a perfect call. And even people writing me on the big up move day on Wednesday, well, is it still there? Are we still going to get the decline? And then we had that massive downside day Tuesday was the big up day, and Wednesday was the big declining day. So that was that 800-point day. And huge declines in all of the markets. So here is the S&P 500. This is the cyclic action that we were looking at. We thought that both of these cycles coming down here would bring it down during this period from that sell zone area, and it did so. It got right into the zone that we expected. It hits 28.25. And then has the big rebound day right there. It's a little hard to see because I got all those lines drawn over it, but let's just make it bigger, and you can see right there. You'll note the big up day that we're having right over here. S&P's up 40, and here's our projection. So you can see the next harmonic family of cycles right over here. You'll note the minor cycle and how it acts. These are running between 8 and 10 days right here. So this is day one on the upside. We're probably going to get more upside in here. We're expecting that this week probably could be up a little bit for the week. though we expect it to be choppy. I think this is a week you could buy dips and expect that the market will come back to the upside. We expect more rebound. The rebound area is into here. This area right over here is 2,900. Right there, we would expect it to get to 2,925 to potentially 2,950 in the bounce. 2,925 will be our target in here on the upside, the middle of this short-term and intermediate-term resistance zone. It's both in alignment. And we're going to look for again, big swings, choppy, but an up week. Momentum, you can see, sharply to the downside. So that slim ribbon resistance, the top of it is right up there near that 2920, 2925 area. The 13-day resistance is right there around the 2900 area. So all of this area is resistance right there, and it means that when you get up into it, you'll be looking for declines. If you get some pullbacks in here, because this is only the first day up, the odds will be very high that you're going to get more upside. So you'll be able to buy the dips in here, and you'll be able to sell the rips that come up into this area here. We're going to look for this to be a choppy, range-bound, but a rising week in what is a big declining negative period. So I wouldn't be loading up on longs for any big upside move. I think this is a time to be nimble and to be trading the wide swings. Out over here, you can see this. This is the early September, mid-September period. There's a ton of risk out here for a free fall period again. In the meantime, between now and somewhere out around early September, we think we're going to be in this choppy market and not get below that 28.25 low. If it does, is that negative? So 28.25 is a magic number right now. If it gets below it, we're going to get a massive breakdown in here. In the meantime, the highest probability is a choppy period in the next 2.5 weeks before we get into a big period of downside again. So this is what I think is going to be one of the really good trading markets that we have been in. It's been a great trading market right now, as long as you don't buy a lot of put spreads and put fruit on your plate and the S&Ps run up $50 up your, yeah, that happens sometimes, and I've had plenty of times when I've gone to the bathroom and lost a lot of money. So that's the nature of being a trader and trading big. The markets right now, probably one of the best trading markets we've seen in a long time. If you're not able to capitalize on it, I really encourage you, cut your size down, widen the parameters you're looking at. It will make a huge difference for you in your ability to catch these swings. That's it for Market Week. I hope there was a ton of information in there that was valuable to you. Write Matt at askSlim.com. Ask him for our trial memberships. Really take a look at everything we do. We have a lot of people working here to bring you this content, and we need your membership. It's really important to us. So please do sign up, become a member, take the trials. You'll learn about markets in a way that probably you have never before, and you'll be raising your probability of success. That's it. I want you to be so unbelievably careful. It is so crazy out there. We're always wishing you great trading.
Well, I'm going to the city.